Welcome to Investors Insights, episode 158. Please keep sending us your comments and questions. They help us bring you the information that you want. So with that said, we have a lot of information to go over with, so let's jump right in.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Plan Partners.
Good morning.
Morning.
Greg is in client meetings, and so it's just the three of us this morning. We've got a lot to cover. First, let's start with domestic. We had a lot of economic reports come out last week.
Right.
Some good, some bad. It was kind of a mixed bag. So really the good was jobless claims. Jobless claims hit a low going back to 1973. And so obviously that's solid hiring within our economy, so that's good. And then as usual, we did have some bad. It's a common theme the past few weeks. The bad was retail sales were down in March. That's been really disappointing from the consumer standpoint. Right. And then also we had small business sentiment hit a 2-year low. And so Greg is part of the NFIB, and he's got some insight there. And so that's really looking forward. We need that to change. And so small business owners are kind of fearful. I think a lot of that is on election.
Yeah, looking for some sort of leadership.
It's the uncertainties, and the markets don't like uncertainty. So Trey, talk about the Doha meetings with oil.
Yeah, we had a lot of international news come out over the weekend, mainly focused around the Doha meetings, where the oil ministers for oil exporting countries got together, Saudi Arabia, Russia, and the hope was that there would be some sort of production freeze coming out of it. Well, that hope kind of was dashed when Iran didn't even show up to the meetings, and they're one of the big wild cards, because most of these producers like Saudi Arabia and Russia, they want to freeze production at their current maximum production. They've never been higher. Well, Iran is saying, we just got back to this game, so they need to increase. They want to increase their production. So that's really where the talks keep falling apart. Our expectations were pretty low that anything would come out of this. There's been a lot of meetings, a lot of speculation. Everyone keeps saying it's going to happen, and it really doesn't, because it's not in the best. Everyone in that group doesn't have the same interests. So unless their interests are in line, it's hard to see them coming to any kind of agreement to cut production, which is the lifeblood of a lot of these economies. And then on top of that, less expected. There was an earthquake in Japan, which is rocking the Asian markets. A couple of large producers have pulled their factory production offline, so we'll have to watch how that goes. Oil's kind of falling this morning on the Doha. Then we got Asian markets falling on that kind of not geopolitical, geological news. So we'll have to watch that very closely. That's kind of unexpected.
And oil was trading down about 5% this morning in futures. So I think we're going back to that $35 trading range with oil for the time being until we get a cut in supply and supply balances out. Oil's going to stay in that range. So Ashley, talk about China. Let's continue the international theme.
No, we will. And we'll say quickly, right before we get into China, we were talking this morning, a little postscript from our point on the vlog last week about the IMF, International Monetary Fund. We told you that the governments were going to call for more fiscal spending. They did. But Bobby and Trey pointed out this morning, and they were right, that the global growth forecast has slowed some yet again. So that was interesting news out of that. We want to highlight that for you because we mentioned that to watch for on the vlog last week. But to Bobby's point on China, for the last couple of years, that has been such a large topic and the impact on the U.S. economy. Over the weekend, the Chinese growth data came out. It was 6.7% first quarter 2016. What's interesting about that is if you go back to the first quarter of 2010, the growth rate has dropped fairly precipitously. But for the very first time, it seems to sort of floor it off from the quarter before, and that's good news. Not great news, but good news. To give you a compare and contrast, in the fourth quarter of 2015, it was 6.8%. So you can see it leveling off a little bit. What the Chinese have done is they've gone in with a good bit of stimulus. We would call that, they seem to have engineered in the course of a quarter fairly soft landing in their economy there. They've stabilized the yuan, they stabilized the outflow of the currency. Why is all of that important? Well, interestingly, we only sell about, or our GDP impact on selling to China is only about 1%. It's not nearly as large as most people think, although it does affect a lot of multinationals at large, particularly in the technology sector. But the interesting thing we want you to focus on with China, it's the indirect pricing pressure that has most of the impact on us. And so what happens is, and when China drops, it affects the price of steel, it affects the price of iron ore, all of these commodities that are non-oil based, and to some degree oil based too.
Right.
However, those have started to firm up now.
Right.
So that indirect price pressure, which is most of the negative impact of the United States when that occurs, has started to level out some, and that's good. We'll mention to you retail sales in China, some of their data is accelerating again, which is great. Hadn't seen that in a long time. Their retail sales are accelerating. Their fixed asset purchases, like building factories, are accelerating. However, in looking at that this morning, we have to be careful about that because those two sectors were impacted by a lot of stimulus coming in.
Yeah.
So it'll be over time to see whether that holds up. But at least the bleeding has stopped, and that's a good thing.
So they're still chugging along, but not like they were a few years ago.
That's correct.
Well, look, thank you for watching. We've covered a lot of information. Please don't hesitate to give us a call if you have any questions, or also email us questions. So have a great week. Thanks so much.